Hi, folks. It was a remarkable week on Wall Street. Markets swung from crisis mode to celebration almost overnight. 2 weeks ago, the world feared another major Middle Eastern war. Oil prices surged nearly 15% in a single day. Yet today, the S&P 500 and Nasdaq sit at all-time highs. How did panic turn into prosperity in just days? Let's explore the events, the economics, the geopolitics, and the stocks that soared or sank this week. This isn't just news, it's your blueprint for navigating volatility.
On June 13th, the Middle East grabbed global headlines. Israel launched unexpected airstrikes targeting Iran's nuclear facilities. The immediate concern? Disruption to global oil supplies through the Strait of Hormuz, one of the world's busiest oil transit routes. Oil markets reacted swiftly, pushing prices up nearly 15%. Yet within days, it became clear this would not spiral into broader warfare. Diplomatic efforts intensified, and a ceasefire was announced on June 24th. Markets exhaled in relief, and stocks surged dramatically. The lesson here? Markets often react dramatically in the short term, but investors who look beyond headlines to real impacts come out ahead. But geopolitical stability alone wasn't enough to explain such a powerful rally. Two crucial economic developments reinforced investor confidence. First, a landmark U.S. China trade agreement was reached on June 26th, securing critical supplies of rare earth minerals, vital for the booming technology and AI sectors. This eased tensions around supply chains and lowered tariff concerns significantly. Additionally, signals from the Federal Reserve pointed to potential interest rate cuts as early as July. Fed officials stated clearly that recent inflationary pressures caused by tariffs were likely temporary. Lower interest rates mean cheaper capital, fueling business growth and boosting equity valuations. These twin forces, trade stability and supportive monetary policy, set the stage for a powerful market upswing. Let's spotlight the week's standout performers in the value-aligned portfolio. Chart Industries, GTLS, led with an incredible 17.7% surge, driven by its massive $19 billion merger with Flowserve. Investors cheered the promise of a global powerhouse in industrial processes and $300 million in anticipated cost savings annually. NVIDIA, NVDA, soared nearly 10%, riding a continuous wave of demand for AI infrastructure. With its new Blackwell GPU lineup due soon, and strong investor anticipation ahead of earnings, NVIDIA's strategic positioning continues to impress. Taiwan Semiconductor, TSM, rallied over 9%, hitting new highs after upgrades from Barclays and Susquehanna. Solid earnings guidance reinforced confidence that the semiconductor giant would meet rising global demand. Broadcom, AVGO, gained nearly 8% following exceptional quarterly results. AI revenue growth surged 46%, powered by robust VMware integration and record overall earnings. Finally, Amazon, AMZN, climbed over 6% as investors bet on its growing AWS cloud services and aggressive AI investment strategy. But not all companies were up. Our two domestic oil and gas stocks were down, reacting to the oil price reversal. Permian Resources, PR, fell nearly 7%, hit by plunging oil prices post-ceasefire. Despite strong financials, investors were cautious amid energy sector uncertainty. Diamondback Energy, FANG, followed closely, declining over 6% due to reduced production guidance reflecting weaker commodity prices and lowered sector expectations. Ulta Beauty, Ulta, declined about 3%, reflecting softer retail spending data despite maintaining decent sales growth. Also, it was a small giveback after 2 very good weeks. AutoZone, AZO, fell slightly over 1%, pressured by rising costs and currency headwinds, despite achieving record commercial sales. Finally, Bristol-Myers Squibb, BMY, dipped just over 1%, continuing to face pressures from patent expirations despite promising new drugs. Here's the key takeaway. Markets react quickly to fear, but reward patience and perspective. This week's rally wasn't random. It was a logical reaction to improving economic fundamentals and easing geopolitical tensions. Great investors look deeper than headlines. They spot the long-term trends, like AI infrastructure, strategic mergers, and trade stability, and hold steady through temporary panic. Bottom line, if wealth is your goal, ignore short-term noise. Own great businesses, trust proven strategies, and maintain a steady hand when others lose their nerve. Let's talk about your financial future. Schedule a call today, and let's make sure you're positioned for whatever comes next.